See what we got first. Agenda approval. Do we have a second?
Second.
All in favor?
Aye.
All right. Our first agenda item is Ms. Jammies with the health insurance plan. This sounds pretty.
Yes, sir. Good afternoon, Chairman
Good
O'Connor and committee members. Today I'm pleased to welcome Keith Thomas from Mark III. He is our health insurance consultant who is joining us this afternoon to provide an update and support our ongoing discussions regarding the division's health insurance program. He's going to give us a projection of what it's going to look like potentially in the future. And without further ado, I will turn it over to Keith Thomas.
Welcome.
Thank you so much. I appreciate being back in front of you all again. It's been a couple months since I had the pleasure of being here, and so we have some update. A lot has happened in the last 60 days, and we anticipate a lot to happen as we close out the year of 2026. So I've printed a presentation that you should have a copy in front of you. And as we walk through this presentation, I just want to say that this is not the issues that we're going to talk about today. Obviously, they are specific to you all, but they are not issues that other groups around the state are not dealing with. Okay, these problems of high claimants are in every group we work with, some worse than others, but we'll talk about what that means specifically for Lynchburg schools. So slide 2 is simply just a demonstration of the market and what we're seeing. And essentially, this is demonstrating an uptick in extremely high-cost claimants. These are claimants that typically exceed $200,000 to $500,000. And you can see both over time from 2019 to 2024 on this chart, not only has the frequency increased, but the cost of these visits has also increased at the same time. So slide 3 is an overall just snapshot of your particular group. This particular slide is broken down to show you the percentage spend for employees, spouses, and dependents over the last 3 years. So we're looking at the current running 12-month period ending in June of 2026, going back to July of 25, and then 2 years prior back. And you can see by the bar graphs on the far bottom right, the overall cost of medical insurance for your group has gone up. The spend per employee per month has gone from roughly $430 2 years ago to just under $500 per member per month. And this is medical only. So slide 3, or the next slide, talks about high-cost claimants. So I mentioned these high-cost claimants are frequent across the entire block of business and across the entire market. This particular slide speaks to your specific high-cost claimants. And these high-cost claimants are anyone that is exceeding $25,000 of expense, actually $75,000 of expense for your group. And we have 7 new this year. And those 7 people, in addition to the people that are already on this list, are spending about 30% more than they spent in 2025. So we're having more people, and the expenditure is going up. We'll talk in just a moment. We do have a very large claim that's coming. When we get to the high-cost claimants, we'll talk about that. Next slide is a summation of the medical spend over the last couple years. You can see in the current period, we're at just above $13 million of medical spend, which is not a crazy increase from 2 years ago at 12.15. But we're going to see pharmacy has taken an extreme uptick, as well as some large cost claimants that are not on this slide as of yet. So the next slide is talking about pharmacy. I mentioned this is going to be a high impact area for your particular group. The chart on the middle right shows the uptick in the past 2 years on the pharmacy spend. You can see that 2 years ago, you were roughly at $3.5 million. And this year, you are pushing almost $5.5 million. We have less people on the plan than we had 2 years ago, but yet the pharmacy cost is a couple $1 million higher in this current 12-month period of time. Slide 7. We are also monitoring the claims. The reports you've seen in the first couple slides are direct from the Anthem reporting portal. We are also monitoring the claims on a month-by-month basis. And these next couple slides are very Excel-driven, as numbers tend to be, but I want to just kind of hit the highlights of this. The 2024 plan year, which is the first year up, you can see the 11% increase. This is the amount that claims increased over the 2023 plan year period of time. and the school was in a negative position from a budgetary standpoint in 2024. In 2025, there was a large uptick in the employee cost share and employer contribution, as well as plan designs that were changed. We mitigated a lot of the run on the 2024 plan year, and in 2025, claims still up 11%, so 2 years in a row, very sharp uptick in claims. But from a budgetary position, we were not in as bad of a position in 2025. Which brings us to the first quarter of 2026, and through the first 3 months of this year, claims were running pretty well at about a 4% increase. However, we still needed a funding increase. This is mainly due to a limitation of funding in the budget in 2025, going into 2026, as well as partial not implementing of the Health Keepers Plan. We'll talk about more of that, but that's a couple $100,000 of potential savings as well. Slide 10 shows a little bit of the change that we've had in the last 90 days. So in the last 90 days, instead of a 4% uptick in claims, we're now looking at a 9% uptick in claims. And we're on pace this year to spend about $19 million or so based on these first 6 months that we're looking at. I put something in this that I want to reference. One is called stop loss credits. So there's a column on the right, just to the right of total costs. You can see on this particular slide, I've got plugged in $108,000 coming in July. This is already scheduled to be coming to you all in July. This is the result of a reimbursement from a high-cost claimant, okay? If we look at the next page, page 11, this is a list of your current high-cost claimant utilization. Again, these are employees or spouses or dependents that have spent above $75,000 in claims. That claim could be split up between medical and pharmacy, and I've shown them separate on this sheet. The stop-loss credit that you are receiving or scheduled to receive in July, or you've already gotten it based on the claims that we see, is for the number one claimant on this list. This particular claim, based on our conversations with Anthem, is trending to total up somewhere in the neighborhood of $4 to $5 million on this one individual, okay? So I just want to put that into perspective, given the entire group. So on this sheet, we have about $8 million of spend, okay? It's only 53 people. You have almost 1,300 on the health plan, okay? Once we add in an additional $4 or $5 million into the spend on this sheet, once those claims come through, and we anticipate them to come through in the next probably 60 days, 30 to 60 days. From a financial standpoint, the school has already hit their stop loss, so they won't have any more contribution for that. But when we look at projections for next year and renewals, all of these things will factor in when we're looking at the plans, okay? So obviously, this is a lot of money on this sheet, and this is only a very small segment of the population, and this number is going to get much, much higher. So without the knowledge of the finalized number of what that claimant is going to look at, we were predicting a high single digits increase to the current health plan, which would get us to about a funding level of about $20.5 million based on some increased funding from the city coming in, as well as Sonia working her magic on the finance side. So trying to get to that lever is a big increase, but unfortunately it's going to be short of where we need to be for 2027. So on slide 13, at the request of the school system and this committee, there was an effort to flatline the billing structure for Anthem. It took some mountains to be moved, but between the effort of the finance staff and our team, we were able to get Anthem to agree to that funding scenario. However, at their first shot at it, you'll see that top line item, they came in offering a $26.4 million rate, which is substantially higher than where we are. The reason for this is really twofold, in my opinion. One is claims activity. There is a significant amount of claims activity happening in your group, specifically in the large claimant area. The second piece of this pie is that under this scenario, Anthem essentially is floating you for your claims. They are essentially being a bank. And because of that, they want to make sure that they don't end up upside down, and they want to make sure you don't end up upside down. The net effect of this scenario is if they charged you, let's just say the $26 million, and you only spent 22, you're getting that money back. It's not like you're going to pay extra money to them for financing it out. But in this scenario, we've asked them to come back with a more aggressive number. They have in the contract set out that they have the ability to reassess the number in month 4, 7, and 10. So there's very little chance that we get upside down because we're going to be looking at this number over the course of the year. But I want to note a couple things. Note point 2. So in 2024, when the school system and the city began working with Mark III on the health insurance consulting, we recommended and implemented a change to the stop-loss contract that is providing extreme levels of protection for you right now. So there are 2 caveats to that policy that we put in place, one of which is a rate cap on the stop-loss. So the stop-loss policy is a separate policy for insurance that insures these high-cost claimants. You currently insure above $400,000 as your level of insurance, so anything above $400,000, the school system is paying a premium for that coverage. That benefit is a 50% rate cap. That is the most they can give you, and that is what they are giving you for this coming year. I'm going to reference just briefly, I mentioned stop-loss credits. Over the last, if you look at 2024, 2025, less than $10,000 in stop-loss credits each of those years, okay? This year, it will be millions. So without those contract provisions, your rate increase for stop-loss would have been astronomical, okay? So the contract provisions we put in place capped it at 50%. There also is a no new laser clause in the contract, which means that the Anthem stop-loss contract cannot isolate this individual that's going to have this very large claim. It cannot isolate them and give us a separate level of stop-loss for that person. That's today. Anthem is considering, based on the financial piece of this equation, removing those 2 pieces of the stop-loss for 2027 and beyond. So we have protection now, okay, but it may not be in 2028, which brings me to shopping the plan. Okay, the intention is to put the plan out to bid in 2028. We are already, based on, we just got these numbers from Anthem. We are putting the stop-loss piece of the policy out to the market to see what the market holds and to see if there's any interest in other carriers picking up this piece of the business from Anthem. This particular claim, based on what we have had conversations with Anthem, it is not a one-and-done claim. It is likely to be an ongoing claim of substantial nature. And so it is likely at this point that one of those 2 caveats would be removed moving forward. And it also is going to make shopping the plan in 2028 extremely difficult. From a viability standpoint, the risk that the companies would be assuming is going to be potentially high, and therefore the premium that they will have associated with that risk is likely to be potentially high. Okay, that's a lot. And I know that it's probably eye-opening. I want to mention a couple things. One is, in doing the math, we are still, the intention, based on our last committee meeting, is to have a 3-tiered plan offering for 2027 to include a health savings account as an option, as well as 2 copay style plans. That is still the intention. Sonia and I are working on rates as we speak about how we can structure that. Some of that is going to depend on the rate that Anthem asks for us to fund, right? So we need to make sure that we're hitting the mark from their perspective. Regardless, there is going to need to be a substantial increase from the school/city side. As it sits currently, the school system covers roughly about 85% of the premium when you factor in what employees are paying and what the school system is paying. It is our recommendation that we would potentially look at, I know we had said that 2 plans moving to health keepers. We may want to consider all 3 plans or just a 2-plan offering moving to health keepers. I know that's not going to be a popular opinion. But if we do not get the claims dollars to migrate from the Key Care plan to the health keepers plan, then we lose that 4 or 5% savings on that claim, which could mean a lot of money potentially. So just some food for thought for consideration. The health keepers plan in the city has gone well. The noise from that transition has been very minimal. I would never say there's no noise. Obviously, there's no noise until it impacts you, right? And so there are people in your plan that would be impacted by this decision. However, there are large financial considerations that need to be weighed out as we're contemplating what can be done on the group size. And I'll be happy to answer any questions and have any dialogue that you all would like to have.
Mr. Connor, you good? I just want to ask a question. Am I good? Okay. All right, so I was trying to follow along. That was rapid fire, all the information. So I'm on page 13, and I guess a bit of my question is, because I want to make sure that we all have the same level of understanding, because some of the committee members have changed, and then we're talking about potentially changing our health insurance plan, and so I want to make sure that we give it, that it's thoughtful in terms of the pacing and the information that we're giving. So I guess if you could just explain a couple of things, when we start talking about the stop loss piece, and then you're saying a significant contribution increase is needed, would that be needed if we transition to the Health Keepers plan?
It's still going to be needed. So the percentage of savings to Health Keepers is roughly 3 to 4 or 5%. The overall savings, if we were to move the entire group, you'd be looking at about 4 or 5% on the medical spend, which in the last 12 months was about $13 million. So there is some good savings there, but it's not going to mitigate the need for an increase. The hole is just too big to mitigate that entire situation.
And would that be an increase more so of going to city council for an increase there, or is this an increase to employees, or?
It depends on how you want to structure it. The problem is that increasing the employees just doesn't generate enough revenue based on the fact that you all are covering 85% of the total. So a lot of it is going to come from your side of the table.
Okay, perfect.
We need to be careful. We've been fighting for this 4%. What we gotta avoid is we hand it 4% in one hand and take it back in the other. Okay, we're gonna get, ooh, this is 4%, but we're gonna increase your insurance rates. So we have to be very careful with that. I do have some questions.
Certainly.
This big increase in pharmacy,
It's a variety. It's mainly due to the cost of specialty drugs is the biggest driver. So think of anything that you see on television or anything that's an injectable drug. Some of these drugs are tens of thousands of dollars a month. That's a huge driver. And then just the overall cost of medications in general has gone up, both on a generic side that they're paying at the pharmacy benefit level. The good news for, if there is the silver lining of pharmacy for you all, is that in the renewal that Anthem has projected, they have not reduced the pharmacy credits that you all are scheduled to get in 2027. Because of the way that the request was to separate and get a flat billing structure for the schools, the city will likely have a negative impact on their pharmacy credits because of the split. Based on the utilization of the plan, there are more credits coming into the schools than there are to the city. And so in the split, you all get to maintain that, and the city would not.
so you're saying that possibly these are GLP-1 type drugs?
Well, so
Injectables?
they are injectables in a lot of cases, but not necessarily GLP-1s. GLP-1s is a very small segment of the population. You're talking about a lot of drugs that are perhaps for psoriatic arthritis. There's a Humira. There's a ton of drugs that would fall into that category that people are using mail order, and paying a decent cost share, but the plan itself is picking up a substantial amount of cost for those medications. In fact, if you look at the high cost claimant slide 11, in the last month, these 53 people have spent $180,000 in drugs. And that's just those 53 people. So you can see some drug spend there, $22,000 a month, $17,000 a month, $14,000 a month. That's not out of the realm.
Okay, so let's go to 10. I have a question.
Okay.
Help me as a non-educated, non-insurance, what is the stop loss?
Great question. So the stop loss is, there's basically a couple pieces that you pay for when you contract with Anthem to do a self-funded health plan. One is the access to doctors. So we've had the conversation of key care and health keepers, right? You're paying for access. The second piece is you are paying them to administer their claims, and that's kind of bundled together. you are responsible, you as an entity are responsible for the first $400,000 of expenses, okay? That is your stop loss level. We call it a specific stop loss. So one person has a specific level of 400,000. If their claims go above 400,000, you are paying a premium for an insurance policy to take over that bill, okay? It's currently with Anthem, and you are paying about $45 a month per person per month to have that freedom so that anything over $400,000 does not get paid.
Which right now we have 2 people.
Right now, you have 2 people that would be eligible to hit that level. And in the past couple years, you typically would have maybe one person, and that one person would just almost barely dip into that level, okay? And so in 2024, you can see you got $922 whopping in stop loss credit. Now, again, you're paying like $35 a month at that point for the policy, so you're not getting much ROI on that. The next year in 2025, you got a grand total of $5,600. Again, you're paying millions of dollars in stop loss premium. And in 2026, so far, you're getting $112,000, but that number is going to at least have another 0 on it by the time this claim comes through. So the cost of administering that program for Anthem is going through the roof, okay? So they were collecting this premium and paying out very little on this expense. They're still collecting roughly the same amount of premium, but now they're going to have to pay millions of dollars.
Okay, so then my next, and I feel terrible asking these questions. So I feel like the Grinch who stole Christmas or something, but. Millions? One claim?
Millions. So I won't go into details on the claim. We
And all that, but is this some type of experimental?
No, sir. No.
Just basically.
An extensive and intensive amount of care that is not scheduled to be over with anytime soon.
So what do places do? Like, what do divisions do or localities do? Because I know we recognize, yes, we don't want to increase for employees, but even if you did, it's not going to cover what we would need. And then if locality says, you know what, we're not going to give you this, what are people doing? Like, what are some other places doing when they're dealing with a situation
So
like this?
a lot of them are making some substantial plan design changes.
Okay.
That is an area where you can extract some money, okay? But ultimately, that's just another way to shift burden to the employee, right? And so that's what we want to avoid.
Yeah.
And these are going to be very difficult decisions, not just for you, but everywhere. It's going to be a situation of how can we afford to continue to offer this great benefit that we have offered for so long? And is it even going to look the same from a cost scenario? Because I had this conversation with Sonia yesterday, you know, even if they got if they got you down to a roughly $23 million, that's still a monumental lift for you all to come up from where you're currently funding at to get to that level.
So once we're in a high dollar claim like that, that can just keep growing, and you're saying extensive, so this could be another 6 months, this could be years,
So,
and we're locked in.
so you're not necessarily locked in. We're still going to bid the plan, right? That's still going to be an option. We're still going to put the plan to the market.
No, I mean with the claimant, like we're still locked in.
Correct.
If it happened while they were employed here, then it's ours. once it's
As long as they are an active employee, they're eligible to stay on the plan, that claim is likely to continue.
Gotcha.
In other groups, what typically happens is oftentimes these claims will get lasered. So I mentioned right now you have a no new laser provision, which means they right this moment, they can't isolate that person. But if they don't add that provision back into the contract, next year that can change. And what typically happens in that scenario is they would come to that person or you all and say, okay, we anticipate that this person is going to spend $2 million in claims. So instead of paying the first $400,000 like you do for everyone else, you're going to pay the first $1.6 million on that particular person. That has its pros and cons, okay? The good news is that if you get a laser, it's not a guarantee that that person is going to spend those claims dollars. They anticipate it, but that doesn't mean that it's a guarantee. Whereas if they leave that person on the stop loss policy altogether with everyone else and add that risk into everyone else, then that means everyone has to pay more money because the entire group is being rated on that. So those will be things that we will have conversations about as we're shopping the stop loss and do we look at carving this person out and giving them a laser versus leaving them all together?
So, if if I understand you right, at some point we had a laser provision. We took the laser provision out, or we've never had.
You didn't have it until you started working with us. We put it in place 2 years ago, and now it's paying off. In the fruition that we did is paying off now because it's protecting you for this year and into next year.
So you're saying, so I'm reading this right. As the no new laser provision provide, explain that statement on page,
So,
sir.
under the current contract, which we're in 2026, they cannot laser a specific individual and give them that higher threshold of cost. Okay? That does not guarantee that they will renew the contract with those provisions in 2027, depending on their anticipated cost. Anthem, that's correct.
So they're saying, Anthem said we might not even give you that option in our next contract
That's correct.
for 2027.
7. And that's part of what we're working on to try to make sure that we can keep those in place. As part of the benefit of working with Mark III is we're handling those negotiations to try to get you that if it's possible. If it's not possible, then we'll cross that bridge when we get there.
Yeah, I have a couple.
Yes, sir.
So, we've been hearing a lot about drugs coming down on the news and all that. Does this have any impact on any of this that we're talking about here? Because, drugs overseas in Europe and all that has been coming down, and then the president said he's gonna make it easier for folks that live here. Has that had any impact on this?
So yes and no. As far as direct impact from a cost standpoint, not yet. The biggest issue so far is they're trying to get transparency into the pharmacy benefit managers that each of the large carriers has what they call a PBM, a pharmacy benefit manager that handles all the drugs coming in and out, wholesale pricing, distributing them back out. From a transparency standpoint, they're trying to make sure that all of those dollars are coming through appropriately. We are seeing in the market a drop in the reimbursement for prescriptions. So that means that right now, the way that your plan works is you get a monthly per member per month credit for RX spend on all of the rebates that are coming in for the drugs that are being spent. Overall, we're seeing that go down across the state. That is not the case for your particular group as we were looking at the renewal for 2027. And it's really based on drug spend. So they still anticipate getting a lot of rebates, and so they've left the rebate level very high. International sourcing could be an option. It would add some hoops for your employees to jump through, a little bit different services than what they're dealing with now. But those are options that we could look at putting on the table to potentially save some cost. But the biggest issue that we have is a funding problem, not a claims issue right this moment. And we do have a claims issue, but the biggest issue is the funding.
Okay, again, this 26.4 million, is that subject to increase next year?
Absolutely. Next year's a whole new year. So the 26 million, that is their first shot at the apple, okay? We've asked them to get more aggressive. The idea behind the 26 million is that they would bill you all $2.2 million each and every month so that you know exactly what your bill is going to be every month. And then at the end of the year, it gets settled up. We think the 26.2 is a little aggressive. We've asked them to come back down. So if they come back to 22, there are caveats that they can reprice the contract both up and down in month 4, 7, and 10. So that ideally, we don't want either party, the school system or Anthem, to be wildly up or down at the end of the year. In a perfect world, it would be a wash, kind of like you'd like to have your taxes in most cases.
So what if we were to exceed what they have allocated here?
So that you would come up with a difference.
have to come up with a
No different than what you would do now if the claims exceeded. If the claims exceeded now, the difference is you'd pay them as the claims come in, right? So you get a monthly draft for all of the claim spend that happens on each given week. The difference will be, at this point, you would do it at the end of the year. There would be a settlement at the end of the year, and either you would owe them money or they would owe you back.
You go back to Mr. Connors, I'm concerned, for the employees, I do have a serious concern for them because they're already in a bind, in terms of cost of living. And then if we have to put more pressure on them, it's going to be very difficult for them to be able to sustain this.
Yeah, and I don't want to downplay the potential increased cost, but if we're looking at a $50,000 employee getting a 4% raise, I don't think we're going to be taking anywhere near that type of level of money. Again, because they're paying such a small percentage of the overall premium, even if you passed a 50% increase to them, it wouldn't cover because you're only talking about a 15% starting point. So we want to minimize that as much as possible, but that means that the school system is going to either need to kick in some additional money or look at making some more aggressive plan changes.
So we're looking at our overall budget, around 120 million,
It's 126 million.
126
Yes.
million, and we're looking at 26, which is about 23% of our total budget.
Yes, sir.
Dedicated just to insurance, just
Yes,
to
sir.
our side.
Yes, sir. Well, the 26 million would be the total Anthem bill, our premiums that we would take from employees, and the premiums that we
Would be
would provide
15% of it.
would cover that total cost.
15%.
That's roughly at the current level of funding. Obviously, that's open to change, but that's roughly where you are now. And I'll also note that I did take, Mr. Connor, your argument on the health keeper's name to Anthem specifically. I don't know that it's going to do anything, but I wanted to let you know that I heard it and I have passed it along. I think they are aware that they need to make a change. It's a big lift to get them to make a change.
Okay. And I finally, I did find my paperwork. It was when I retired and went on Medicare, Health Keepers was my first Medicare Part C and D.
Okay, you had a Medicare Advantage plan.
Why do I know that name so well?
Yeah, that was a Medicare Advantage plan if it was a Part C, which is a different network than the group
But it
Health
was
Keepers
known as
plan, but
Health
it's called the same. Yes, sir.
Yes.
I agree. They need to clean it up.
Yeah.
So,
They need-
just wanted to let you know, I did
Sounds like
pass it along.
Overlap and mixing and, yeah, okay.
Yes, sir.
Are there cheaper plan options out there?
Great question. So the rough answer to that is no. As it sits right now, you are paying the cost, right? So you are a very small, less than 10% of your overall spend is due to what we would call fixed costs, which are premiums that you pay to the insurance company for stop loss and access to doctors and pharmacy rebates. The vast majority is claims, okay? So you're paying the claims. Anthem has a network that you all are very comfortable with, okay? They also have some of the deepest discounts in comparison to a lot of their competitors. So, let's say and I'll just throw a number out, let's say it's a 10% cost advantage, okay? And you go in to have a $1,500 MRI, not only does the school system save that 10% cost advantage, but the employees also save it. So it's really twofold. Claims are high, nobody did anything wrong, but we need to fund it on the other side so that we can make sure that the claims get paid. Great question, though. And that would be something we would look at in the bid next year. So when we put the plan out to bid, we would look at administrators for the benefits themselves in regards to what we would call a TPA, a third-party administrator, someone who is actually processing the claims. And then we would also look at carving out the stop loss and any of the other pieces and try to come up with the most comprehensive package possible.
So may I ask, what's the difference between like what we do and what I'm used to before I came here was like the local choice?
Sure.
And some people were a part of that, and it
Yeah.
almost felt like it was, you couldn't go, but the increases couldn't be but so high or something at that time.
So local choice is a self-funded health plan, technically.
Okay.
It's just a big group. It's all of the groups of the state combined, okay? They have 5 plan designs that they give. They have 4 copay plans, 1 high deductible health plan that they give. When we looked at the plan, it was 2 years ago?
Yes.
It was about a 20 or so % increase of cost to you currently. The difference being, 1, dental and vision is included, right? So you have all that bundled together. Up until this year, so January of 2026, the local choice did include GLP-1s for weight loss. In 2026, they removed that benefit because they could no longer afford to do that. They also passed on a 14% increase across the board on average to their constituents, to their participants. I personally have 2 groups that were above 20, and they had the GLP-1 removal, which Anthem accounted for about 6% of the spend. So, that's pushing a 30% increase. That's not, and I have 2 of those, so it's not just a one-off. We certainly could look at it. I mean, it would be an option. It would require a significant lift because local choice only gives 2 start dates, 7/1 and 10/1, not, so we would have to look at running a short plan. There would be a lot that would go into play in looking at that transition.
Yeah, it was just a question. I was
Yep.
curious.
It's a good plan. So I actually just moved a group of about half your size from a direct contract with Anthem to the local choice. It was a very good benefit for them when we did their bid. Usually, once you're above 1,000 employees, you're just better off to be self-funded. You're just better off, the math works out that,
Gotcha.
especially with them being willing to essentially give you the same billing structure that local choice has, which is one of the great things that groups like, is you get what we call a fully insured rate. So you have an employee-only rate, you have a family rate, and then that doesn't change throughout the year. Anthem is basically giving you that autonomy to do that now. It's just you're managing your own pluses and minuses at the end of the year.
And I think it's interesting that they get rid of the GLP-1s because I'm thinking with the weight loss, lower blood pressure, lower A1C, things like that, the added benefits of that versus the looking at it as, hey, we're going to remove it, but I'd rather have someone on diabetes medications or
Yeah.
something else. It's just, it's odd to.
It'll be interesting to see how it develops over
Yeah.
time. I mean, from a cost standpoint, you're looking at about $13,000 per person on the plan. I think what happened was local choice, and I say local choice, it's an Anthem DHRM partnership. They work together to administer the program. I think they had to do it because I don't think that they were interested in passing along high 20% increases and 20% increases instead of 14s. Because like everybody else, everybody's in the same boat. Everybody is struggling to find the money to be able to afford the benefits. It's not going to get any easier. Mr. Connor, to your point, 20% of the budget, and next year, I can promise you need to have a 10% increase roughly to cover the increase for the following year. And it's going to be that way until the end of time as it looks right this moment. I've seen some statistics that have the average trend in the medical community north of 10% now on average instead of high single digits. So it's not a problem that's going away anytime soon, unfortunately. And medical innovations are just getting better and more expensive. Things that would have killed you 10 years ago, now you can survive and live a fairly healthy life.
And just spend more money.
It's just somebody's got to pay for it.
That's why I see, I only spent $906 in a medical claim, but I spent $155,000 in prescriptions.
And you'll have the reverse of that too.
Just on that one person, I got one that's a negative 837, but 87,000 in prescription medicine, so, there seems an imbalance there.
Well, we're gonna have about a $5 million medical and very little on a pharmacy coming very soon.
Sorry, I didn't mean the amount.
The balance is going to shift, I promise.
I need duct tape.
And so the 45 million is what we're estimating. We haven't seen the claim specifically. We're just basing it what we've seen other claims. It's possible that it comes in just under that. It's possible that it comes in above that. It all depends on what is being done. It's multiple facilities, it's a very large claim. And any time a claim gets this size, before it gets submitted, there is a team at Anthem that reviews the claim for accuracy so that it just gets submitted the one time, because it's a monster.
Okay.
If you think about all the line items that get billed for a multi-million-dollar claim, it's not something they want to do over and over.
Have we dropped the Medicare, we were gonna explore that, the eligibility for Medicare people that could transition, and what impact would that have on this?
So we actually are going to provide some training and some opportunities to learn about it, but we can't encourage people on a plan to go to Medicare.
Well-
That's a violation.
What we will be doing, however, and we're currently in process with already, is a dependent eligibility audit so that we can explore what alternative coverage may be available to your employees. Do they have a plan available at a spouse? And then we can look at potential policy changes that can align with those findings. But we are in the process right now in the implementation of sending those out to employees so that they can respond back with the appropriate documentation. And then once we have that, then we can come to you all with a recommendation based on the findings.
So if we started our enrollment drive,
So open enrollment will be 3 weeks, the 1st of November. So what we want to do is have our 3-tier plans built, and that's what we're spending some time working on right now, to make sure that we don't, outprice our employees, so to speak.
It'll be very important.
And in full disclosure, we're having similar conversations with the city. We're meeting with them on the 17th next week. They are going to have some decisions to be made for their renewal as well. So again, you're not alone in the boat. It's just, it's a little bit more dire looking than it was 2 months ago when I was in front of you.
So can I ask a couple more questions then?
Absolutely.
So the city, now, do their divisions, are all the other divisions in the city on the same city plan? In other words, is the fire department, police department, and city employees on one plan, but we're school division, we're on a complete different plan?
So you're on as it sits right this moment, you're on identical plans. The difference is the network. So they elected to move their plan to the Health Keepers Network for 1/1/26, but the plan design stayed the same.
So,
But all their departments
But
are.
it's all one plan. It's just
Yes.
one
it's all
plan.
one plan, I'm saying,
Yes.
if we were on that same plan, would that benefit us in any type of way, or do we have to be our own lone range? Do we have to be by ourselves with handling our own thing?
Well, you're still getting buying power by being with the city, with Anthem. You're getting buying power on the network access fee that they charge. And as it sits right now, you're getting benefit from the stop-loss contract that's jointly housed. In regards to if you were to move to their plan design, yes, that would definitely save you money. But the reason it would save you money is because you would take all of the claims that are currently in Key Care and you would move them over to Health Keepers. So you would be saving on the discount even if you did nothing else, which I think would be a great move if the committee decides that they want to do it. Just know that there will be some small impact, especially in the first 30 days once we transition the plan. If we choose to do the 3-plan offering like has been discussed, we are going to certainly move some of those claims dollars out, but you're going to have some people who are going to hang out on that higher plan, and we're going to miss those opportunities for savings. So that's more of a philosophical question for you all in regards to, you still would be offering a heck of a good benefit, and it's the same network that the city is, but it doesn't give you, the caveat that you wanted was that you wanted to continue to have that plan even if it was potentially at a higher cost for employees. And that is something that we are looking at, is having to increase the cost to stay on that plan specifically, mainly due to the savings that it's eligible for the schools and for the employees.
So, but what's the difference between the Health Keepers plan and then the plan we have now?
Great question. It's about a 98.5% match, and it all comes down to doctors, okay? So no difference in the hospitals that you can go to. All of them are the same. The main difference in this area, when we did the analysis, is chiropractic and physical therapy. It doesn't mean that you don't have access to those two facilities, but it just means that the doctor that you were seeing may not be in the new network.
Okay.
So that is of the 1.5%, it is mainly in those two categories. It's not in primary care doctors, it's not in cardiologists or endocrinologists or any of what I'll consider the normal specialties. It's in those two very specific areas. And those were the areas that the minor noise from the city came. PT is almost always the one that happens because you're going there for multiple visits. And a lot of times you may already have been there and going back for something else. So that's usually the one that gets us. The largest PT therapy clinic in Lynchburg did come on board to the Health Keepers plan at the end of last year. So that does help a little bit.
And who was that?
Yes, thank you. They had previously been out of network, and they had moved into network at the end of last year.
Rehab.
Yes.
All right. So right now, we got 3 things to think about. Join the city plan. Move to Health Keepers completely, or go to our 3-tier plan. Am I?
1 and 2 are essentially the same. Your option 1 and option 2 are basically the same thing. If you move to the city's plan, you would have Health Keepers, which is your point 2. So it's essentially you have those 2 options. it will eliminate some of the savings to do a three-tiered option, as I mentioned. If those people, especially if they tend to be the highest claim spenders, if they stay on that plan, then we would not see that savings come in those claims dollars.
Would there be any direct benefit to the employee when we present open enrollment? Hey, this is your plan now, but if you went to the Health Keepers plan, you would save this, or it really would be transparent to them?
So we are scheduling, what we're working on now is a scheduled situation that does have an increased cost to the employees to stay on the Key Care plan, to incentivize them to look at the Health Keepers. Not everyone will do it, but that is the idea. And the goal is to have an even lower premium for the health savings account. We don't, I would love to have a budgetary situation where we could fund some of that, but that's not going to happen this year, given the situation. Completely understand. We also need to figure out kind of how many people are maybe going to go into that plan, so that from a budgetary standpoint moving forward, you kind of have a thought of what that would cost you to contribute to those plans. But in order for the HSA to be appealing with no contribution from the employer, there has to be some premium savings, or otherwise the participation in that plan will be essentially zero.
So what three-tier options are we looking at now, going forward to pose what we have now?
Great question. So your current plan, the way it exists today, is going to be option number one. Okay, so no change in theory, okay? Stays on the same network, that's option one. That's going to have an increased cost to the employees.
Okay.
Option two is a relatively similar cost plan to what you have now from a premium standpoint, similar in plan design to option one, but the only difference is it's on the Health Keepers network. So still copays for doctors, copays for drugs, the only real difference is the network, okay? Then the third plan would be a new plan offering, which would be a health savings account, which is a high deductible health plan that enables people to put some money into a health savings account, save for a rainy day, but the downside is they pay the negotiated cost for the visit instead of a copay. So kind of do a low, medium, and high approach to try to give people some opportunities for choice, given the fact that we're faced some difficult situations.
And just so you know, the reason that we thought that through is I remember back early in my career when I was in my 20s and 30s, I was paying for health insurance. I might have went to see the doctor
Once or twice.
And, it wasn't until I got in my 40s and 50s that I really, and we may have, young, people that exercise a lot and just in pretty good health that might decide, hey, it's better for me to go ahead and I can manage my own health care through a health savings account. But that's not available to them now. So we want to make that available to those people. And I got a feeling many of our 20 and 30-year-old, our new people coming in, our new teachers and stuff coming in good shape, they might consider that as a great option.
As someone who's 41, I would not have my health care any other way.
Yeah.
It's my personal take.
Well, I mean, when I was 41, I was doing it. Wasn't until I was, I'm going to say 61. But
So,
Okay.
yeah, and it's still good benefits, it's just, how you pay for it, right? So, and it really, the HSA is for those people that are either spending a ton of money and they're gonna hit their maximum out of pocket, they can go ahead and get there quicker and save some money in the premium, or, to Mr. Connor's point, they're not spending as much, save the premium, put that money in and save for a rainy day. It's the only triple tax money that I'm aware of, so you get to put money in tax-free, you get to spend it tax-free, and then once you're above a certain amount, usually $2,000, it grows tax-free. So it's a really good qualified money.
I think we got a lot to think about.
A lot has changed in 60 days.
Yeah, I need duct tape. I'll just keep a roll right here. Okay, thank you.
Thank you.
Greatly appreciate the time.
Thank you.
Yes, ma'am.
I'll get with the two of you to figure out what our next steps are.
Yes, sir.
All right, on the next one, Jennifer, appreciate you again.
Yes, sir.
I know I'm putting I keep calling on you a lot.
I'll be here anytime you want me.
Okay.
I appreciate, be official. I appreciate the level of engagement of this committee and being, a lot of times it's right before open enrollment when this conversation might happen because sometimes you've got other stuff going on. So I appreciate the engagement and trying to be as early on this as possible. Literally, we got the first shot at the renewal last week and we've been on the phone multiple times. I was here last week and been back again this week. So, we value the partnership that we have with you all and we want to try to do the best we can do for you.
We appreciate it.
Thank you so
much.
Thank you. What's doing my agenda?
Is it under your laptop?
Why get this giant laptop and have stuff under it? I don't want to change it though. They tried to change it. I ducked the call. Amen. The next thing we have on our agenda, and I know it's gonna be,
Riveting.
no, I know it's not the detail that I want yet, but at least you'll give us an overview of what we can expect. And then I see we have a construction project update. Mr. Jordan, but you're not next. Who's next? You're next. With
And it's gonna be good.
Yes, sir. So as you alluded to.
FMX.
Yes, sir.
Okay.
As you alluded to, we don't have a whole lot of information here today. I'm gonna jump into that here in a second, but we are gonna open up a can of worms with what we're about to talk about. So Lynchburg City Schools is currently transitioning to a program called FMX. That is gonna be our new facilities management system. Because we are migrating data and preparing for district-wide implementation, our traditional maintenance reporting is limited for this month. However, FMX will ultimately provide us with much stronger, more meaningful data moving forward. Instead, I want to take this time to provide a brief update about the new program itself. FMX serves as much more than your average work order system. It brings together several key components within the program that will significantly expand how we manage our facilities across Lynchburg City Schools. I have provided a one-pager that goes into greater detail, but I do want to touch briefly on each of those components today. To start, the work manager component will manage work orders and preventative maintenance while helping us track our assets, equipment, recurring issues, and maintenance cost. The capital planner component will support long-range facility planning, project prioritization, and anticipated capital needs. The event manager component will help coordinate facility rentals, athletic scheduling, and building use, while the warehouse manager component will support inventory, purchasing, and material usage. And then finally, one of my favorites is the utilities manager component, and this will allow us to monitor utility cost and consumption, identify trends, and look for potential savings. Together, these components will make up FMX and will give us a much more comprehensive view of our facilities and operations and provide data we simply have not had before. As we launch FMX, we know that this data is going to give us the good, the bad, and the ugly. But that information is much needed, and it will help us make better decisions around maintenance cost, utilities, capital needs, facility utilization, and operational savings. With all of that being said, I am happy to announce that today we received word that the implementation and integration process is complete. So, with that milestone reached, we are going to be sending communication to our designated faculty and staff to get them started in the new system later this week. Knowing all of this, we look forward to providing the committee with our first FMX progress update and initial insights at next month's Finance and Facilities meeting.
All right. Looking forward to that. What I'm mainly looking for is I want to see if we can start to predict so that we don't all of a sudden have a $60 million in renovation that we need. We can start to say, hey, this facility is getting a lot of attention on a, if you're looking at it on a consistent basis, you might see things that jump out and say, hey, looks like Dunbar Middle School is constantly having to fix the same chiller over and over and over again. Then maybe we need to look at it in a different way. That's what I'm kind of looking for. And if we got roof, we fixed the roof on a building, it's got a warranty, but we're constantly going over there fixing it. Is there something else wrong like we did with the envelope issues at Glass? And I'd like to be able to see those things on a monthly basis.
And there's your man right there.
I see him back there.
Boys back
He
there.
He hiding behind the podium, but I know he's back there.
Yeah, boys.
So great.
As Mr. Marshall was just mentioning some conversations today and looking at some things they were talking about and looking at like, hey, it was unfortunately deferred maintenance. And then, of course, it becomes problematic when it's deferred. And so they've already been identifying some of those things.
Okay.
So that's the kind of stuff you want.
That's the kind of stuff I'm looking
Gotcha.
for. It makes me so happy.
I heard you.
And eventually, I would like to, Mr. Marshall, also get some information on things like out of transportation, like fuel costs
Okay.
and bus maintenance, especially what we're paying, if we're paying Truck Body Corp in different places, Sonny Merriman, things that we could possibly doing in-house. So I'm just promising you that in the future, I will be asking for some more detailed information on our transportation department.
Absolutely, noted.
So, Mr. Marshall, this team here is an internal team that you've put together?
So this is a software program that we
Okay.
have purchased, and through that, we previously had another system. We decided that we wanted to go a different route so that we could get some more useful data, and FMX was the product that provided that data for roughly the same cost, actually.
Very good.
So we transitioned from School Dude to,
I was School Dude, then Operations Hero, then FMX. And the good thing, and while we're talking about that, the historical data, we requested that historical data transfer over.
Okay.
So we're able to still track that. We just couldn't pull that today.
okay.
So we can't see where we've been because.
Today I was really expecting an overview, so. Any questions or anything? Okay. All right, where's my agenda? Construction projects update. Travis Marshall and Jordan, my buddy Jordan, Mr. Jordan Eubank.
All right. As you all know, there is a tremendous amount of exciting work happening across Lynchburg City Schools, from several major roofing projects that began this summer and are now wrapping up, to the building envelope projects underway at EC Glass and RS Payne. We are seeing important improvements throughout our division. There is much more to come. We have a number of exciting projects already underway and many others coming down the pipe that will continue to enhance our schools and facilities for our students and staff. To share more about where we've been, what's happening now, and what's ahead, it is my pleasure to invite our construction project manager, Mr. Jordan Eubank, to the podium to give us an update on our work happening throughout the division.
Thank you, Travis. Thanks for having me, everybody. Yeah, so I'm just going to give sort of an overview of each project that we have going on or that we had going on this summer. So I'll start with our roof replacements. So some of the schools, we are still ongoing. Fort Hill is complete. Perrymount Elementary School will be complete this week. Lincoln Elementary School, they are still tearing off and replacing the roof. Bedford Hills, the roofing is completed. All we have left to do is the coping metal. We did make we had a fairly good summer overall with the roofing projects. As you all know, in July, we started getting a little bit more rain, so it kind of slowed us down a little bit, but here in the next 2 weeks or so, we should be fully complete with all schools. Moving on to the auto shop at EC Glass High School. So we did have the new epoxy flooring completed this summer, as well as repainted the whole room. And now we have our LCS maintenance crews working on installing new lights. And the new equipment, which is currently scheduled to ship on the 18th, which is a little later than what we wanted, but we're working with the EC Glass staff to get that all in here installed so we can have a nice new shop to look at here in a few weeks. Let's see, building envelope projects. So RS Payne, more or less still ongoing over there with the exterior repairs. They made pretty good progress this summer on some of the areas that they needed to get to while we didn't have students. We are currently working with the RS Payne administration on the schedule for the auditorium work. Being that is decorative plaster, we had some trouble finding somebody that was able to actually do the work, but now we believe we've got that person, so we're working on getting that scheduled this fall.
Okay.
The EC Glass High School, as you all probably saw, we had quite a bit going on over there with this project. They did make good progress on the exterior repairs, and as you saw, we had quite a bit of civil work going on up front, which they are working on getting cleaned up this week. We will have some what we're gonna do is basically block off that front courtyard until they can get everything cleaned up. We did run into some unforeseen conditions with one of the manholes up there, and then also, one of the sewer lines that's on the front. We had to make some changes there, so we're waiting on some other materials, to show up. But, we've worked with the staff there, and I believe we have a good plan to have everything enclosed and safe and cleaned up for when the students come back next week. And then hopefully in just a few short weeks, we'll be able to kind of open things up a little bit as we get the stuff in and complete the work. But overall, we made good progress with both of those projects. Let's see, the turf replacement at EC Glass, we'll start there. Once we demoed the track, we found an additional concrete curb that's around the inside of the track that we didn't know was there.
Didn't even know it was there.
And it's too high, and when we try to demo it, basically the trench drain system that surrounds the track just is crumbling when we try to demo it. So, I am very close to having pricing finalized and, the new system approved, to where we can release a new trench drain system, because we're gonna have to replace it. There's no other way to do what we need to do without taking it out.
So there was a curb there that was hidden.
Yeah,
from
when
the
they
previous-
poured that apron that we saw before, they covered everything up. So when we demoed everything out, there's an additional concrete curb on the inside that's about this much
Probably
too
should have
high.
been demoed before we, okay.
Yeah, so, anyway, we're very close to having things moving forward again on that one, but, it has caused about a month delay, and, I have been working with the AD over there, to sort of project and keep him up to date on where we're at, but we're pushing to get it done and moving as soon as we can.
So in the meantime, our EC Glass Sports are gonna be at the city stadium.
They're working out with both colleges and at City Stadium. So there's some big conversations happening with partnerships.
We looking at any cost that needs to be approved by the finance committee?
Nothing yet, nothing at this time.
Okay.
Those conversations are still early on.
Okay.
And then, I guess moving on, Heritage High School turf and track, it is complete, 100% done. So if you have some time, go take a look at the track, it looks really nice. And then we have access control, so access control, the phase 1 schools, we're all but complete on those. The key boxes and the key systems, we're still working on some of the details there to make sure that we have keys in the boxes before we change the cores. Basically, we don't want to hinder the buildings any until we have everything absolutely right. So phase 1, we're very close to being wrapped up with. Phase 2, they have started at Bedford Hills, Sheffield, Laurel, and Fort Hill, and then they'll have Bass and TC Miller left to do, but we are moving on in phase 2 with the cabling and the electrical work that they have to do beforehand, and we've also got hardware ordered and on the way for a few of those schools, so moving forward. And then lastly, one that we didn't have on this list, because it's technically a city project that we've been working with them on, was the Dunbar Community Schoolyard. Phase 1, which is complete outside of one or two things. We had some furniture show up damaged that we had to reorder, so that's hopefully showing up here in the next couple weeks, and that will be complete. And then just an update on that project as a whole, phase 2, actually, the bid opening was this afternoon, so we should be moving forward with phase 2 on that here pretty quick. So that is all for ongoing projects. As far as upcoming 26, 27 projects, we are very close to getting the RFP out for the design work. We've been working with procurement over the last couple weeks, and I think we will have that out this week for sure.
Okay. RFP this week?
Yes, sir.
Okay.
All right, any other questions?
Members? Thank you, Mr. Jordan.
Thank you.
Appreciate you.
Thank you.
All right, board member comments. We'll start with our newest member.
It's a lot of information to take in.
Oh, yeah.
But I'm just excited to be here and thankful for the opportunity to be able to work and help and do what I can.
Yeah. Yeah, just to say we are excited again for another year. Hopefully we'll tackle some of these tough situations and try to work again to accomplish them. So appreciate the efforts of everybody. You guys are great.
Informational items, I'll still need to meet, I'm glad she's here, Dr. Farmer, to see if we can agree to move the finance meeting to the day of our school board meetings instead of on a different day, because we're more likely to have something that needs to be voted on financially, the same, you know, like we've had with some other issues that, so we've had to change the finance meet and move they have to go to 206 or a different room. To avoid that, I would like to propose and talk, the chair suggested I talk to her about they taking over the day that we normally have and let the finance meeting be on the same day as the regular school board meeting, so we can transition. If there's anything financially we must vote on, we can have our meeting, lock it in finance and go right into our school board meeting and vote on it, rather than when our finance meeting is in a different week, we can't do it to the next month, or I have to reschedule. So to avoid constantly reschedule, I think we rescheduled the finance meeting 4 or 5 times last year. For that reason, we had to vote on something that day, or, you know, that next meeting. So I'm gonna talk to you, Dr. Farmer.
I hear you.
Okay, and see if we can't swap the finance meeting and the LACR meeting and just swap those days so that we can be, you know. Other than that, that's all we have. Our next scheduled meeting right now is September 15th.
Yes.
Yes.
Yes. And our next school board meeting is September 15th. So we got it set for that day, and I think the 8th is when we have our joint meeting with the city.
Yeah.
So nothing else, we're adjourned.